Welcome back to an episode of Transparency and Merit. My name is JP, and I want to give you a few thoughts on the market, finance in general, and why not? So, yeah. Oh my. Here we are. It's November 30th. It's a Tuesday. 2021. Year's almost over. And I do a lot of shows with Brian, and he likes to cover a whole lot of what I refer to as nothing. I kid you. I just don't like the red thing, the whole race thing. I prefer talking about everything else in the world except for race. To me, it's a mind-numbing exercise, but I know there's a lot of you out there who do it. So be on with your bad self. Anyways, I am checking out the market as I always do, and I came across a tweet from Jim Cramer, because everybody knows Jim Cramer, this crazy piece of crap. He's been calling for market tops now for months, scaring the living hell out of investors. I haven't had one sweat over the market collapsing in these last few months. Now, when it does, and it will, it's going to be gnarly. It's going to be like, plan to be out of town when that happens. It's going to be bad. In the meanwhile, diversify. That's why I always talk about crypto, and I talk about metals. Silver is the best investment on earth. I feel it's the best thing to hold, the best asset. It's better than a car. And I mean, I'm talking about as far as value, overall value. Forget the car. Forget anything else you could hold. You can get silver for like $24 an ounce. It's incredibly suppressed, artificially suppressed in value. It has been, and it will be for a while, unless they get called out. Anyways, whatever. You get my gist. Jim Cramer is a piece of crap. And I want the world to know that, I guess. I don't know why I'm yelling it. I don't know how many people even see this, but so let's take a look at his tweet. Let me share that really quickly. Oh boy, I don't see it. Why not? All right, well, maybe not. If I can get it up, I'll do it. I don't know why I'm having problems sharing that screen for some reason. All right. No, I don't want that. I don't want that. Oh, forget it. Forget it. If you're going to be that way. I'll try it again one more time because I want you to see this tweet. It's not an option. Okay, fine. Be that way. So anyways, I'll just read it to you. Jim Cramer says today, this is unbelievable. I'm glad you have patience. CNBC's Jim Cramer calls for a vaccine mandate and calls those who refuse to get vaccinated psychotic. And he also, this isn't in this tweet, but he also called for, if people don't get the hot sauce, whatever you want to call it, that there should be government intervention and military intervention. Cha-cha-cha. He's not crazy. Jim Cramer's not crazy. He just plays it on TV. It's just bizarre. Why is this guy on TV? He's wrong about things all the time. It's unbelievable. It's almost as if, should I say it? It's almost as if he's paid to get you to buy against what's going to happen. I don't know that for sure. What do I know? Jim Cramer's awful. Don't ever listen to him. And why would he want the military involved? Why would he want every single person to get that shot? I don't know. He does stocks for a living. Maybe he's invested in, I don't know, a major company that makes one of those hot sauces. I don't know. Can't make it up, as Manarino might tell you. So yeah, there's that. Very annoying. And it goes I don't know why a guy would go on TV. You tell me, why would a guy go on TV and promote something like that when he's a stock guy? I mean, that's where I get all my medical advice is from Jim Cramer, after all. Good Lord. Good grief. And it happens with all of these, the Fed chair people too. They do that too. They want everybody to do that. They get their, go to the doctor, go get that thing in your arm. Okay, whatever. I don't know. I can't make it up. All right, now it's getting crazy. What am I doing here? Stop screen. All right, so there's that. Jim Cramer's a freak. But the market is interesting right now. Very interesting. We've had a couple really big red days now. Friday after Thanksgiving was bad. Yesterday was an up day, Monday. Today's Tuesday. It was a down day, and it was down pretty big. It got hit hard, but I'm not scared. And this is why Jim Cramer's such a piece of crap. Every time the market has some sort of disturbance like today, he's going to be there telling you, I told you so. This is it. But it's not. Anyway, it's not. And he's just some weird dude. I have to get over this whole thing. I have to get over Cramer. Let's see here. I'm still trying to share my screen. I don't know why it's not working. Okay, here we go. I want to show you why I'm not scared right now, why today didn't scare me going into today, why it didn't scare me last week, why any of these so-called dips, which aren't dips, by the way, the market got hit hard today. It went down. It's still only about 5 points off of the all-time high. So what does that tell you? It tells you a couple things. One, we're at a much higher level in the market. And so there's even small dips are going to be bigger dips than what you're probably used to. But it's not anything to fear. And here's why. I follow a indicator, the MMRI. I'm not trying to sell anybody on this. It's called the Manarino Market Risk Indicator, but it's a cool indicator. You see the number here, 86. And if you look at the little scale here, it shows you that we're in a low risk environment in the market. Once it gets over 100, we enter that yellow zone. So it turns into more of a moderate risk and so on. But this is all weighed out against the debt market. And it's an interesting formula. It's down here. It's even listed here. If anybody needs it, I'll post a link in the description. And you can follow the MMRI, because if you wake up in the morning and the MMRI is at 400, like it was in the 2008 stock crash, if you had been following this MMRI, you would have seen that the day before, or maybe even 2 days before. You would have seen a massive update. It didn't go up 400 points in that day. Um, so, anyways, if you follow what I'm saying, the debt market, and you don't have to know anything about the debt market, which is the beauty of it all. I barely do. I mean, I know some because I study it, but I'm nowhere near investor strategist level at all. I just know what I know, and I know what this formula is telling us. And if this thing spins out of control and goes up into that red zone, then yeah, you may have a little window of time to be able to avoid some things. I don't know. I don't want to promise that, but I'm going to follow this MMRI up until the point when it's no longer needed. And I think eventually the market will crash at such an epic level that there won't be a person in America who didn't hear about the fall of the market. Yeah, it's going to be big, but we're not near that right now. There's a lot of things that got to happen before the market completely bottoms out. But this fall that in the market today, so Friday it fell, and that was kind of a typical post Thanksgiving Black Friday. It traditionally isn't a very good day for the market, so I don't know. Uh, but the MMRI had been going down. It was in the 90s, so it was still in low risk territory on Friday. During the weekend, it plummeted to under 90. And so I knew going in today, I wake up, it doesn't, if I look at the MMRI, it doesn't mean the market's going to go up if it's in low risk area. It just means that right now we have a buying opportunity, and we do. Take it for what you will. Now it's up to you to find what sector is good to go. And I'm going to say it like I've been saying it. The crude oil sector got hit big from the dip on Friday and today. So if that's something I'm telling you, the crude oil will not stay low. It will not. And I would even go on record to say we may even see, and I'm serious about this, the price of crude and the crude stocks are plummeting. Went down a lot in the last couple of days. If it continues to go lower, we could very easily see some strange false flag attack. Something will happen that creates an oil panic, and the price of oil would go up and stay up. And that's just how it works. Okay. Oil does not have the value that it's at right now. It should cost way under $20 a barrel. But we were up as high as I think in the upper 80s recently. Some major bank just predicted, what was it? Was it Morgan Stanley? Predicts $150 barrels of oil. Whoa. So it's not going down. And so that's a good sector to get in right now. But yeah, check it out for yourself. Do your due diligence and study up. Crypto is doing pretty good. It had an up day overall. But people, again, were thinking, people were selling all their crypto last week. And I'm like, wait, what are you doing? Like, hold on to that stuff, man. Unless you're like living off of that money, just let it ride. These Bitcoin and all its whatever, I don't know what you call them, minions, slave coins, I don't know, but those are all going to go up. Maybe not every single one of them, but the market overall, the crypto market, is going to go so much higher. It's just, again, people freak out anytime, whatever goes up, it's got to come down a little bit or a lot bit. I don't know, but it's crypto. I don't think we've gotten anywhere near where it's going to be headed. I mean, I'm serious. It's going to go way the hell up. Anyways, that's all. I just want to keep this one short, and I went a little bit longer. So thank you again for listening to High Finance Episode 3 on transparency and merit. Good day, sir and madame.